right, in this video, we're going to go over the wedge pattern. A wedge pattern is one of the most commonly used Forex patterns in the market because it's really easy to identify and it has a pretty good expected outcome when it comes to a wedge when you can identify it. So the wedge we're looking at here is a rising wedge, and this is a continuation wedge pattern. There's two types of wedges. There's the reversal wedge and there's a continuation. The continuation is meaning that the wedge is forming to eventually continue the trend. In this example, it's a downtrend and there's a rising wedge forming, but it continues in the downtrend once the wedge is completed. The second thing that you want to notice about the wedge is that the wedge on the rising wedge is going to make, from the bottom point, is going to make higher highs and higher lows. It's going to be slightly higher on both sides. It's not going to be where it's jumping and stuff like that. It's just going to be slightly higher. And, on the high side, it's slightly higher on the low side until the wedge is complete. As the wedge is being formed, price is going to bottle up and get tight. And think of it like if you're tightening up like your air pressure. So basically you're making a pressurized can. As soon as that can gets open, or if you bust the can open, the air is just going to fly out the can because the air has been pressurized. That's what it's like with a wedge in the markets. So this is the rising wedge continuation. And here is the falling wedge continuation. So there's an uptrend. It's making slightly lower lows and lower highs until it's bottled up and it continues with the trend. The other type to notice is going to be the reversal wedges. Let me go and access those. So the reversal wedge. So here's what that would look like. So a reversal wedge is just meaning a reversal because the market is going up in one direction and the wedge, once it completes, it reverses to another direction. So you see here you have a rising wedge, but instead of it being a downtrending wedge, a downtrending wedge, basically to where it forms in a downtrend, there's an uptrend that forms the wedge. Now, because it's a rising wedge, it's still going to continue down. That's not going to change. But the reason this is a reversal wedge is because the trend of the market leading up into the wedge. So if you see that this is happening on a uptrend, you see the rising wedge, then this is a sign that price may be reversing, the trend may be reversing. Same thing with a falling wedge. You'll have the same rules apply, but the only difference on a reversal is that the trend is going to change after the wedge. So if we look at live examples, here, you're going to see a couple wedges. So let's focus on this one here. And maybe change the time frame so you can see it easier. There we go here. So you see there's an uptrend happening. The uptrend happening towards the wedge. And then once we're inside the wedge, you see higher highs, higher lows, and higher highs here. So see higher highs and higher lows. The price gets tighter. Now it doesn't have to get really tight, but the point is that it gets tighter. The channel gets tighter. And then eventually you have your breakout. If you look here, this is one where it got a little bit tighter. So same thing. We have our downtrend. We have our downtrend here. And then you have your slightly lower lows and lower highs. So they get slightly lower each time. And then the market breaks out here. And it reverses. Those are two examples of reversal wedges. Continuation wedges are going to look very similar to the reversal wedges. Just the only difference is that price is going to have a continuation from that point. So if we look here, see if I can find a continuation wedge. So a continuation wedge, basically see that price is going down. And this is a continuation rising wedge. So the same rules are going to apply. You're going to get the higher highs and higher lows. Do that wrong. You're going to get the higher highs and higher lows. But then you're going to get that move down. That would be on a continuation wedge. I think I marked out another point where one might be. Here we go. So this was a real clean wedge. So you got the wedge here. And then you have the higher highs and higher lows. And it tightens up really well, and then it continues. And that's how you look for the wedge pattern. And that's what you look for in a wedge pattern. There's another one here. It's not as clean. Now that this candle here invalidates it. The reason that it's not a wedge is because you see this candle here, this candle set here, it's not supposed to go lower than this candle. So that invalidates the wedge. But anyway, this is a clean example of a wedge pattern, and that's what you're looking for.